Welcome back. In the last video, we allocated the indirect costs of our shoe store. In this video, we're going to allocate the service department costs of our shoe store. So let's go back to our spreadsheet. So we've done steps 1 through 4. Cool. And cross those off. Now we're going to do 5, 6, 7, and maybe 8. Okay, so first we need to determine the total service costs to be allocated. Then we determine over which activity service costs will be allocated, calculate the rate by which to allocate service expenses, and then finally we're going to allocate the service expenses. All right, so let's go to 5, 6, and 7, tab that says 5, 6, and 7. All right, so we are here. The first thing we want to do, 5, is figure out what are our total service expenses. So in order to do that, we have to go up here, and let's start with purchasing. So purchasing, we know we have direct expenses of $49,000, plus we need to allocate out the indirect expenses, which were $3,500, $2,500 for rent and $1,000 for utilities. Because at the end of this exercise, we want all of our service departments to have 0 in them. No expenses, no revenue, nothing. We want their income statement to be 0. So we need to allocate out both the direct expenses and the indirect expenses. So that's why I'm going to add them together right here in cell B58. So I'll do the same thing for payroll. I'm going to add my direct expenses to my indirect expenses, and I'll do the same for IT. All right, so now we know how much we're allocating. I'm just going to add up our service department expenses so we have that. I'm going to allocate a total of $167,500, $52,500 for purchasing, $4,500 for payroll, and $70,000 for IT. All right, so step 6, I think, says determine what activity we're going to use. And I've given this to you. Purchasing, we're going to allocate by the number of purchase orders. And this probably sounds a little familiar if you remember back to ABC costing or ABC allocations. Payroll, we're going to allocate by number of employees, and IT, we're going to allocate by the number of service tickets. So you're saying, well, how do we get that information? And I'm going to give it to you. There's no way you would know. If you work for a company, you could go get it. But for now, I'm going to give it to you. All right, so you notice I only have balances in boots, sandals, and athletics, because in these next steps, we're going to allocate all of our costs out of our service departments and put them into our profit centers. So we don't want to allocate anything back into purchasing, payroll, or IT, because then we just have to allocate it out again, and then we'd allocate it in again and out again, and that would really become not fun super, super quick. Okay. So first thing I want to do is figure out how many purchase orders in total I had. 105, good, so that matches. And then make sure that I have 15 employees and $70 service tickets. Okay, so that's going to be my denominator. So now let's figure out our allocation rate. And our allocation rate is the total cost in purchasing is going to be divided by the total number of purchase orders, meaning we are going to allocate $500 to each profit center for each purchase order they issued. Ew, something very strange. And we are just going to hit the undo button, which is my favorite part of Excel. And okay. So next, we're going to figure out our allocation rate for payroll. So we have to allocate $45,000, and we're going to allocate it over 15 employees, which means that each department is going to get allocated $3,000 of payroll cost for every 1 employee that they have. All right. Same thing for, goodness gracious, I am all over the place here. All right. Same thing for IT. So we're going to allocate the total $70,000 of cost in IT across 70 service tickets. And a service ticket, in case you don't know, it's when you call IT and you say, I've got a problem, and they assign you a ticket number so that they can track how many people they've helped. So we are going to allocate $1,000 to each department for each service ticket that they've opened. Okay, so I think that wraps up 5, 6, and 7. And then in step 8, we're going to actually allocate the cost. So let's go over to the tab for step 8. We'll do it correctly this time. And we're just going to do our allocations. So Boots is going to get allocated $500 for every purchase order they opened. And as it turns out, Boots opened 20 purchase orders. We multiply that by the rate of 5,000 or 500. And so Boots is going to get allocated $10,000 of purchasing costs. Sandals opened 15 purchase orders. The allocation rate is $500 per purchase order. So Sandals is going to be allocated $7,500 of purchasing costs. Athletic they opened 70 purchase orders times an allocation rate of 500. So they are going to be allocated $35,000 worth of purchasing costs. Remember, we're not allocating anything to our cost centers. We have our total on the side here, and our total is $52,500, and that's the exact amount we wanted to allocate. The other thing I'm actually going to do here is I am going to minus $52,500, because when we allocated, we put that $5,200 into Boots, Sandals, and Athletic, and we're going to take it out of purchasing. Because right now, purchasing actually has expenses in their department, and we want to take them out because we want them to be zeroed out by the end of the day. Okay, so if you feel comfortable trying this on your own, go ahead and pause this video and do the same thing for payroll and IT. And once you've finished, restart the video so that you can check your answers. So let me give you a moment to pause. Okay, we are back. Now we're going to allocate payroll and IT. So payroll is going to be allocated by the number of employees, and we're going to get $3,000 for every employee. Boots has 5 employees times $3,000 per employee. The Boots is going to get $15,000 of payroll costs. Sandals has 3 employees times $3,000 per employee. Sandals is going to get $9,000 of payroll costs. And Athletic has 7 employees times 3,000 employee. So they're going to get $21,000 of payroll costs. And we are going to be taking those costs out of the payroll department. Okay, and now we're going to do IT, and this is based on number of service tickets. So Boots, this computer has a mind of its own. Boots they opened 18 service tickets, and they're getting $1,000 per service ticket for $18,000. Sandals opened 32 service tickets. They are really very technically inept, aren't they? Or maybe they just have more complicated equipment, computer programs for Sandals. Or maybe it's just sandal season, right? Maybe it's spring and they're doing a lot more business, so they have a lot more troubles. So 32 service tickets times 10,000 or 1,000 a service ticket. They're going to get $32,000 of IT costs. And Athletic opened 20 service tickets times 1,000 a ticket, and they're going to get $20,000 of costs, IT costs. And then we're going to take that $70,000 out of the IT department. All right, so now if we can go across and add up what we've allocated. And we can see we've allocated $43,000 of service department costs into boots, $48,500 into sandals, and $76,000 into athletic. We have also allocated $52,500 out of purchasing, $45,000 out of payroll, and $70,000 out of IT. Okay, so that is going to do it for our service department costs. And then I'm going to have you come back for one last video related to allocations, where we are going to calculate our net income for each of our 3 profit centers. Okay, so I will see you there.